So form of balance sheet, and the company is Varka Hotel Limited. Varka Hotel Limited. Balance sheet as on 31st March 2012. Balance sheet as on 31st March 2012. Figures as on 31st March 2012. 21. 2012. Similarly here, we have the notes and then we have the profit and loss account. Form of statement of profit and loss account. Varka Hotel Limited. Profit and loss account for the year ended 31st March 2012. 31st March 2012. Okay. So let's start with the notes. Okay, I've kept some of the headings so that we don't waste much time. Now, the first thing is with regard to the share capital. The first thing is with regard to the share capital. We have to start with share capital. Now, in the problem, they have not given us authorized capital. Okay, but we know the authorized capital, and how do we know? I'm going to do a small calculation here. Is authorized capital authorized capital. Okay, I'm going to get it as they've said this 6 lakhs. What is that? Share capital 6 lakhs. This 6 lakhs is paid up to 30%. Okay, so authorized capital will be the 100%. So it's going to be, we can do a small note here. This is just like a working note. It's going to be 6 lakhs is for 30%. 6 lakhs is for 30%. For 100%, it is how much? For 100%, it is how much? Okay, for 100%, it is how much? And that comes to, this is just a working note. This is not part of that. This is just a working note. I've just done the working note here itself for you to understand. So that will come to cross multiply 6 lakhs into 100% divided by 30% comes to 20 lakhs. So the authorized capital is actually 20 lakhs. The authorized capital is actually 20 lakhs. Okay, so I'm going to close this because we don't consider authorized capital to be part of the total. Is this clear? How did I get 20 lakhs? This small calculation that I've done here. Just put this in italics. This is just like a working note here. Okay, this is the figure that we are interested in. And then we have the paid up capital. We have the paid up capital which is given to us, and the paid up capital is 6 lakhs. This is what we are going to take in our balance sheet. This is what we are going to take in the balance sheet. Okay, how do I know this? They've said share capital here 6 lakhs, and then they've told us the share capital is paid up to the extent of 30%, and there are no calls. So 30% is completely paid up. 30% is completely paid up. So this is the paid up capital. Okay, it's not divide and all. I hope don't get confused with this. It's not division. Okay, so that's how you get the paid up capital. Next, we come to reserves and surplus. We have items here. The first thing that we have is the profit and loss account. Okay, now under reserves and surplus, we have different titles. Okay, the first thing is the profit and loss account. Okay, so under this, we have the opening balance. Under reserves and surplus, we can have things like profit and loss account, which is one head. There'll be many calculations under profit and loss account, like last year's profit or loss, this year's profit or loss, any appropriations that are made. Okay, we can also have an item, what we have in this problem, share premium. We can have some reserves like general reserve. In the next problem, you're going to solve a problem with general reserve. So these are the different heads that we can have under reserves and surplus. So the first thing that we have is profit and loss account, and I know the opening balance. opening balance on 1st April 2011. It is a loss. Okay, opening balance on 1st April 2011 is 2 lakhs. So I'm going to write it in brackets. How do I know it's a loss? Because they've said a debit balance. Okay, the fact that it's a debit balance, it is a loss. 2 lakhs. I will just write this and keep because I don't know anything else of the profit and loss. Okay, so profit and loss account, I will just underline because this is one part of the reserves and surplus. Besides the profit and loss account, you can leave some space. We also have share premium that goes in reserves and surplus. Yeah, 3,60,000. Share premium that goes in reserves and surplus. So this also is another item, 3,60,000. I will write this because we'll have to adjust all these things and then get the final amount of profit and loss account. 3,60,000. Okay, so we will get the balance here and then we will adjust everything else. Is that clear? Next one. Our next head is, we'll go head wise. After share reserves and surplus, the next thing that we have is, if you check the format, if you go as per the format, the next thing that we have is after reserves and surplus, we come to non-current liabilities. And under non-current liabilities, the first thing that we have is long-term borrowings. Okay, and I think we have an unsecured loan that we are going to put here under long-term borrowings. Under long-term borrowings, we have an unsecured loan. Yes, 3 lakhs. Okay. Now be careful. There's an adjustment to that unsecured loan. There is like this unsecured loans. Okay. There's an adjustment to those unsecured loans. There is outstanding interest. Okay. So when we come to the adjustments, we'll calculate the outstanding interest. So unsecured loans comes to 3 lakhs. Unsecured loans comes to 3 lakhs. Okay, I'll leave space for an adjustment because there's an adjustment. After unsecured loans, then we have long-term provisions. Okay, sorry, this is not unsecured loans, long-term borrowings. Unsecured loans is the item under this. Okay, unsecured loans, then we have under long-term borrowings, we have unsecured loans. Then we have, if you check the format, we have other long-term liabilities, we don't have anything, and long-term provisions also we don't have anything. So now we move on to current liabilities. Now under current liabilities, the first thing that we have is short-term borrowings. Short-term borrowings, so I will just, we have a bank overdraft, if you remember. We have a bank overdraft here. Short-term borrowings. Bank overdraft. Okay. Bank overdraft that is given to us is, yeah, 1 lakh. The bank overdraft that is given to us is 1 lakh. So this has got no adjustment. There is no outstanding interest. This is 1 lakh. Short-term borrowings. Then we have trade payables. I think we should have creditors. Yes, we have suppliers here, 4,15,000. 4,15,000. That will be note 5. Trade payables. Suppliers, 4,15,000. Lakh 15,000. Then after trade payables, we have other current liabilities and then we have short-term provisions. Okay, other current liabilities and then we have short-term provisions. I don't think we have anything under other current liabilities. Let's just check it out. I don't think we have, I don't remember discussing anything under other current liabilities. Yeah, there's nothing under other current liabilities. So we directly go to provisions, short-term provisions. Note 6, short-term provisions. Okay, now we have two items here. One is the dividend, which we are yet to calculate, the proposed dividend. And the second is the provision for taxation. It's given to us, but we will write it a little later when we are actually going to the provision for taxation. But I will write that note and keep, because we know there's something happening here. Okay, so then we come to the assets part. Now under the assets, the first thing we have is non-current assets. Under non-current assets, we have fixed assets. Under fixed assets, we have tangible assets. Okay, so that's going to be quite a huge note now, because there are a number of fixed assets here. So the first thing that we have is kitchen plant, and remember there's depreciation also. Kitchen plant is 1 lakh, motor car is 15,000. Kitchen plant 1 lakh. Okay, less depreciation. Then there is motor car. Motor car is 15,000. You can write the depreciation also now. It's up to you what you're comfortable with. You can do the adjustments also as and when you see the relevant item. I'll just take these and then we can go to the adjustments. Motor car 15,000. Then we have miscellaneous receipts, bank overdraft, share capital. Linen, crockery, glassware will come under other current assets. Okay, not under fixed assets. Restaurant furniture and fixtures is 20,000, and premises here are 5 lakhs. Restaurant furniture 20,000 and premises 5 lakhs. Restaurant furniture 20,000. Premises 5 lakhs. Okay. I'll come to the depreciation a little later when we reach the adjustments. Okay, I've not touched any of the adjustments till now. Next we have after the tangible assets. After the tangible assets, we have long-term investments. Okay, I'm talking about non-current assets now. In non-current assets, fixed assets, under fixed assets, tangible assets. Fixed assets is the first item. Then we have non-current investments. We don't have anything under that. Long-term loans and advances. Now, under long-term loans and advances also we don't have. These are long-term loans given. Okay, we don't have anything. And the last thing there is other non-current assets. Now, under this other non-current assets, I'm going to show an item called preliminary expenses. Okay, I'm going to show an item called preliminary expenses. That will be note number 6, 7, 8. Note number 8. This is going to be note number 8, where I'm going to show other non-current assets. Okay, and under this we are going to have preliminary expenses. Under this we are going to have preliminary expenses, and if you see this now, preliminary expenses are basically, I think the preliminary expenses given to us are 10,000. There's an adjustment to this thing that the preliminary expenses are written off. We'll come to that a little later. For now, we will just write this entry. The preliminary expenses are 10,000. Okay, for now we'll just write it and so this we are done with the non-current assets. Now we come to current assets. So the first thing here is current investments. Okay, we don't have anything under current investments. Then we have inventories. We have inventories. Here we will have something, the closing stock of provisions. Closing stock of provisions. And the closing stock of provisions here is given to us 6 lakhs. 6 lakhs. Then we have trade receivables. We'll surely have debtors with us. Visitors ledger, yes, 7 lakhs. Visitors ledger is note number 10. Visitors ledger 7 lakhs. So inventories, trade receivables. Then we have cash and cash equivalents. Cash and cash equivalents, note number 11. We should have something here. Cash in hand, cash at bank. Okay. I think we don't have cash in hand, cash in bank given in this problem. So we won't have that note. Okay. So that note won't be required. Cash and cash equivalents. Then we have, so I'll make this short-term loans and advances. Now here we have something, short-term loans and advances. I think I discussed this, that advance income tax paid will come here. That advance income tax that is paid will come here. Here, the last item here, advance payment of income tax, 3 lakhs will come under that. Okay, because it's paid in advance for the next year. So it's like a short-term asset for you. Advance payment of income tax, which is 3 lakhs. And the last thing is other current assets, note 12. Note 12. Other current assets, I think we have this linen, glass, all those things here. Yeah, linen, crockery, glass, 40,000. Linen, crockery and glass, 40,000. What you can do is when you're actually solving the problem, as you do it, you can tick what you have taken. Okay, so that there is no confusion. This also has depreciation on it, so I will write it kind of in the inner. Okay. Now we move to the profit and loss account, this notes of the profit and loss account. So that was note 12. This would be note 13. Revenue from operations. We have just one item here, that is sales. What is that? Collection from visitors, 20 lakhs. Okay, this is collection from visitors would be the receipts of the hotel, the main income of the hotel. So collection from visitors, 20 lakhs. Then we also have other income. We also have other income. We have some miscellaneous receipts here. Miscellaneous receipts or miscellaneous income, I think. Yeah. Miscellaneous receipts, 1,20,000. Some other income, some general income. Miscellaneous receipts, 1,20,000. 1,20,000. Okay. Next we have cost of materials consumed. We come to the expenses part, cost of materials consumed. So we start this like this. Opening stock of provisions. We just have provisions here. Opening stock of provisions. Add purchases and less closing stock of provisions. Opening stock of provisions, add purchases and less closing stock of provisions. So opening stock of provisions 3 lakhs, purchases are 9 lakhs. Opening stock is 3 lakhs. Purchases are 9 lakhs. And closing stock of provisions is given as the inventory 6 lakhs. We have already shown one effect of that. We have shown it in the inventories already. So this is 6 lakhs. So this put together comes to 9 minus 6 is 3. This comes to 6 lakhs. So cost of materials consumed would be 6 lakhs. Okay, so we don't need purchases here because this one last time we took purchases because for meat and fish there was no opening stock and closing stock. So we took it separately under purchases. But here there's no purchase separately, purchase of provisions, opening stock and closing stock. Next we come to, after that we come to purchases are not required. Next we have is employee benefit expenses. Employee benefit expenses. So that will be note 16. Okay, there's already employee benefit expenses here. That would be note 16. I think we have some salaries and wages. Yes, salaries and wages 2 lakhs. That's the only thing that can come here. Salaries and wages 2 lakhs. Salaries and wages 2 lakhs. Okay, employee benefit expenses. Then we have finance costs. Note 17. Now we have one item here. We have that interest on that unsecured loan. Okay, we have to calculate the interest. So when I reach your adjustments, I will come to this. Note 17, finance cost. Then we have depreciation. Depreciation and amortization. Depreciation and amortization. And the last thing, this again we have an item. I'll come back to this a little later. And the last thing that we have is the other expenses. So note 19, we had quite a bit of notes in this problem. Other expenses. Okay, other expenses I'll put first and let's finish everything in the trial balance. So the balances that are given. So miscellaneous, all these things are taken. We can just go through to check. Office expenses, 4 lakhs. We have office expenses of 4 lakhs. Okay, I think that's the only thing if I'm not mistaken. Office expenses 4 lakhs. Ah, okay. Preliminary expenses also comes there, but I will come to that when we come to the adjustments. We have another thing here. Selling and distribution expenses 1,50,000. That's it. Selling and distribution expenses 1,50,000. Selling and distribution expenses 1,50,000. Now, here they have told us that all office expenses consist of audit fees of something and directors fees. That's just for information. Okay, I'm not writing that because I'll just waste time writing it, but that is just given for information. Okay, we are not done with this. We still have the preliminary expenses. Okay, we'll check what the adjustment says, and then I will come to this, and then we will do. So we'll go to the adjustments now. Try and finish off the adjustments. Closing stock is already taken. We took it in the cost of materials and I've also shown it under inventories. Depreciation, kitchen plant is 10,000, restaurant furniture 2,000. Let's put this accordingly. Less depreciation. Kitchen plant is 10,000. Okay. So this comes to 90,000. Then we have furniture, it's 2,000. Furniture, it is 2,000. So that comes to 19,000. Okay, then there is also on motor car is 3,000, premises 50,000, motor car 3,000, motor car it's 3,000. So this comes to 12,000. And premises it is 50,000. This will come to 4,50,000. 4,50,000. So let's just total this. Once we total this, we will get our total of tangible assets comes to 4,50,000 plus 5,40,000, 5,50,000, 5,60,000, 5,70,000. I think it comes to 5,71,000. Comes to 5 lakhs. Sorry, 90, 12. This is 18. 5,70,000. 5,70,000. We'll also transfer the depreciation at this moment. There's depreciation on kitchen plant 10,000, motor car 3,000. Kitchen plant 10,000. Motor car 3,000. Then we have furniture 2,000. And premises is 50,000. Yes, so this total comes to 50, 60, 65. Total depreciation comes to 65,000. Sorry, I missed another item. We also have linen here. Okay, that I forgot that. Linen cutlery 10,000. That has to be shown under linen and cutlery. Where is that? Less depreciation here as well. That is linen cutlery, I think, is 10,000. So that comes to 30,000. Okay. This is just one item by itself. I have to also include this in the depreciation. 10,000 on linen and cutlery. 10,000. So this comes to a total of 75,000. Okay, so that is done. Next we come to share capital is paid up to the extent of 30% and there are no calls and arrears. We have already done this. We have already shown the authorized capital based on this. Okay. The unsecured loan was taken on 1st January 2012 at 18% interest per annum. Now we need to calculate this outstanding interest. So we will go to unsecured loans here and say add outstanding interest. And that interest would be 3 lakhs into 18%. Now be careful of the months. Since the loan is taken on 1st January 2012, our year started on 1st April 2011 and our year ends on 31st March 2012. So basically we have taken the loan 3 months prior to closing. So when we are calculating the interest, it's going to be 3 by 12. It's going to be 3 by 12 and that comes to, I think that amount comes to 13,500. That amount comes to 13,500. So the total unsecured loan comes to 3,13,500. 3,13,500. Okay, and this 13,500 will also figure in our finance costs. Outstanding interest on loan 13,500. That's the only item that we have. 13,500. There are any questions, we can have a discussion a little later. or you can, if it's really urgent, you can stop me and ask. Okay. Office expenses, this we have, I said this is just for information. We don't need to mention this anyway. If you want, you can mention it in office expenses itself. Okay. Now, provision for taxation 3,50,000. Now, one effect of this is the profit and loss account. We have not yet done it. Okay, but when we do it, we'll take it there. Second effect, which comes directly in the short-term provisions here. Provision for taxation. Provision for taxation 3,50,000. And we also have another item here which would be proposed dividend. Okay, we've still not calculated that. We have to calculate that. And then we have preliminary expenses are to be written off. Now, one thing I'll just explain what preliminary expenses are quickly. Now, what are these preliminary expenses? Before the business is actually started, the business incurs certain expenses, not of operation, but more of setting up of establishment. Okay, these preliminary expenses are more of establishment expenses. And what happens when these expenses are actually incurred? There is no income coming in because these expenses are incurred before the operations start. For example, if we are talking about this business, before the hotel starts running. So these expenses could be in terms of setting up of building, in terms of some kind of labor. So there is no income to kind of recover these expenses. So what happens is once the business starts successful operations, the preliminary expenses that are incurred are written off every year till it comes to zero. Okay, in 1 year, the entire amount may not be written off if it's quite a bit, but it could be written off over a period of time. Okay, it could be written off over a period of time. Now, how do we show this? Is the part that is written off for that particular year, the part that is written off for that particular year is shown under other expenses in the profit and loss account. Is shown under other expense, the profit and loss account, and the remaining part is shown in the balance sheet. Whatever is left, whatever is not written off, that needs to be written off in the future. Okay, so for example, here preliminary expenses are to be written off. Here we have, what is that? The preliminary expenses, yeah, 10,000. Okay, we have preliminary expenses of 10,000 here. So what I'm going to do is in where is that? In the non-current assets, okay, I'm going to show this as less written off. These are less written off. Now, what they've told us in this problem is that entire preliminary expenses need to be written off. Okay, so this entire 10,000 is going to be written off, and actually, what is going to remain is 0. What is going to remain is 0. So basically, this non-current assets, I've just done this calculation to show you. Sometimes what they tell you, write off half. So if you have written off half, you would have minus 5,000. 5,000 would have still been left. And the second effect is the part that is written off is shown under other expenses. So the entire 10,000 is written off. So this total comes here to 5,60,000. This total comes to 5,60,000. Is this clear? So always remember with regard to preliminary expenses, the part that is written off comes under other expenses, and the remaining part, like how I show the remaining part here. Right now in this problem it's 0 because the entire amount is written. Okay. Next we have directors have proposed a final dividend of ₹6 on each equity share in addition to the interim dividend already declared. Okay, now the question is, how do we get this final dividend? Now, always remember, even in problems like banking, dividend is always calculated on the share capital, and that to the paid up share capital. Now, to pay 6 rupees on each equity share, we need to know how many shares there are. Okay, so let's look at our share capital. Now, this is our paid up capital. Remember, dividend is always paid only on the paid up capital, not on the authorized capital, or not on the issued capital or something like that. Only on the paid up capital. Now, they are telling us it is 6 rupees per equity share. Okay, it is 6 rupees per equity share. Now, if you look here, we don't know how many equity shares there are. Okay, we don't know how many equity shares there are. We know the paid up capital. The paid up capital is 6 lakhs. Okay, the paid up capital is 6 lakhs. So what I'm going to do is I'm going to do a small calculation right below here. It's like a working note I'm going to do. Okay, it's not a note. The answer will be calculation of proposed or final dividend. Calculation of proposed or final dividend. We know that 6 lakhs is the total paid up capital. Okay, we need to know it's rupees 6 per share what they are paying. What have they said here? It's rupees 6 per share, 6 on each equity share. Okay, so how are we going to get the number? So what I'm going to assume is I'm going to assume that each share is 100 rupees. Each equity share is 100 rupees. And how much has been paid up? Only 30 rupees has been paid up. How do I know 30 rupees has been paid up? They've clearly said here in the adjustments. They've said the equity share, what is that? The share capital is paid up to the extent of 30%. 30% is only up to, we can assume that if the price of the share is 100, only 30% has been paid up. That is only 30 rupees has been paid up. Okay, only 30 rupees has been paid up. So what I'm going to do is, I'm going to divide the 6 lakhs. I'm going to divide the 6 lakhs divided by rupees 30 divided by rupees 30. Okay, and if you divide 6 lakhs by 30, you will get 20,000 equity shares. You will get 20,000 equity shares. You can divide 6 lakhs is the total, rupees 6 lakhs divided by rupees 30. Okay, so that means you have bought 20,000 equity shares, or 20,000 equity shares have been bought, but only 30 rupees has been paid. And then this 20,000 equity shares I multiply by rupees 6. This 20,000 equity shares are multiplied by rupees 6 and I get rupees 1,20,000 as my proposed dividend. I get rupees 1,20,000 as my proposed dividend. Okay, because there is no other way. This rupees 6 always has to be multiplied by the number of shares and there is no other way for us to find it. So what I do is I divide 20,000, I divide 6 lakhs, that's the total capital. Assuming, how did I get 100? Okay, I'll put here, assumed each face value or value of each share is rupees 100, rupees 30 is paid up. So that's why I'm assuming this 6 lakhs is collected by paying 30 rupees per share. So I want to know how many shares are there. So I get 20,000 equity shares, multiply that by rupees 6 and I get total of 1 lakh. This is my proposed dividend. Okay, now from this proposed dividend, there are two effects. One effect is it's shown here. Okay, it is shown here. I'm just waiting. I'm not shown the interim also. Interim also comes here. I'm just waiting for the current year's profit or loss. Then I will adjust the dividend. That's one effect. And the second effect is here. Proposed dividend. That is 1,20,000. And that comes to 4,70,000. 4,70,000. That comes to 4,70,000. Is that clear? So the only note that is incomplete right now, I think, is this one, the reserves and surplus, the profit and loss. Okay, so that we will have to adjust when we get our profit, and we also have to minus that interim dividend and proposed dividend because the dividend is declared out of the profit. Okay, so the dividend is declared out of the profit. So now let's just transfer our items. Let's see how much we can do. So the first thing that we have is equity and liabilities. Under equity and liabilities, the first item is shareholders funds. And under shareholders funds, we have share capital. Under shareholders funds, we have share capital, which is note 1. Then we have note 2, which is reserves and surplus. So these are the two things that we have under shareholders funds. Okay, so note 1 we have ready. Paid up capital is 6 lakhs. I told you authorized capital is not shown. It's only the paid up capital, that is 6 lakhs. 6 lakhs. I'm not going to show the reserves and surplus till now because I don't know the amount. Okay, so equity and liabilities. First thing is shareholders funds. Under shareholders funds we have this. Then we come to the second one. Okay, we have here, I think we have items here. Yeah, non-current liabilities. Non-current liabilities. And under non-current liabilities, the first thing that we have is long-term borrowings. I think that's the only item we have here, long-term borrowings. Note number 3, and the amount is long-term borrowings is 13,000, 3,13,500. 3,13,500. Okay. So under long-term non-current liabilities, this is the only thing that we have long-term other what is that? Long-term borrowings. Then we have long-term provisions, other non-current liabilities. So we don't have anything under those items. So I'm going to go directly now to the third one. The third one is going to be current liabilities. Okay. Under current liabilities, long-term becomes short-term. Long-term becomes short-term borrowings, and we have short-term borrowings. Short-term borrowings. So that is note 4, and that is short-term borrowings 1 lakh. Then we have trade payables. Five, which is 4,15,000. Then we have short-term provisions 4,70,000. 6, 4,70,000. That's it. There's nothing under other current liabilities. Okay, we didn't have any other item. Then we move to the assets part. We have done all this. We move to the assets part, tangible assets. So we start with assets. Under assets, the first thing that we have is non-current assets. Non-current assets. And under non-current assets, we have fixed assets. And under fixed assets, the first thing that we have is tangible assets. We already have a total of our tangible assets, note number 7. And the tangible assets are 5,70,000. 5,70,000. 5,70,000. Okay, so that's it. Then fixed asset, under non-current assets, you've got fixed assets, then you've got long-term investments, non-current investments. Okay, what we have one item here, which is other non-current assets, which comes there, note number 8. Now, under other non-current assets, B, which will be B here, fixed assets is the first one. Other non-current assets. Okay, I have prepared a note here and I've shown it as nil. Okay, why I prepared a note? Because there was an item, but the entire part is written off, so there is nothing left. Okay, so even if it's nil, it's better to show it because anyway you have prepared a note. So we are done with the non-current assets, and now we come to current assets. Current assets. Under current assets, the first thing that we have is here we have inventories, which is 6 lakhs. Note number 9, 6 lakhs. Then we have trade receivables, which is note number 10. Then we don't have cash and cash equivalents, but we have short-term loans and advances and other current assets. Short-term loans and advances and other current assets. And other current assets. Okay, trade receivables is 7 lakhs. Then we have, I think, advance payment of tax is not 30 lakhs, it's 3 lakhs. 7 lakhs, 3 lakhs, and 30,000. 7 lakhs, 3 lakhs, and 30,000. We cannot tally the balance sheet yet because we still have one item missing here, reserves and surplus. For that, we need to do the profit and loss account. Okay, so I will go to the profit and loss account now. Let's see what we can complete. So we have the first thing here is revenue from operations. Revenue from operations, and the amount is, this would be note number 13. We have ended with note number 12. Yes, 13. That comes to 20 lakhs. Okay. We also have other income. Other income, which is that miscellaneous receipts that we had, which comes to 1,20,000, and the total of this comes to 21,20,000. Then we come to expenses, which is number 3. Under expenses, we have various things. First is cost of materials consumed. Here we don't have any numbering as such. We just have all this under expenses. Cost of materials consumed, which is note number 15. I'll just write all the notes. After that, we have employee benefit expenses. Employee benefit expenses. Then we have finance costs. Then we have depreciation and amortization. And the last thing we have is the other expenses. 90. So we have these amounts now. So the cost of materials consumed is 6 lakhs. Okay. Employee benefit expenses are, I think employee benefit expenses come to 2 lakhs. Finance costs is 13,500, just that outstanding interest. Depreciation comes to 75,000, and other expenses 5,60,000. 75,000 and 5,60,000. Okay, so all the expenses put together come to, check this, it will come to 8 lakhs, 13 lakhs 60, 13 lakhs, 14 lakhs 30, 14 lakhs 30 plus 14 lakhs 43, 14, 43, 48, yeah, 14 lakhs 48, 500. 14 lakhs 48, 500. Now we are not done here. We calculate profit before tax, okay, which we didn't have in the other problem. I'm going to calculate profit before tax, which is 1 minus 2, and that is going to give me 21 lakhs 20,000 minus 14 lakhs 48 500 comes to 671 500. And I already know the provision for tax. I already know the provision for tax, which is, there's no note number for this because they've directly given it to us as 3,50,000. And then the last thing that I'm going to get is profit for the year, or profit for the period, which is the final answer, that is 321,500. That is 321,500. Okay, let's just see if we can complete this because next we will meet only on Wednesday. 3,21,500. Now this I have to transfer to reserves and surplus. Okay, so opening balance we know, add profit for the year 3,21,500. 3,21,500. Okay, from this we minus both the dividends, less interim dividend, and we also have proposed dividend. Proposed dividend. The dividend is always appropriated from the profits. Okay, so interim dividend given to us in the problem is 60,000. Interim dividend is given as 60,000, and proposed dividend we have calculated, that working note what we have done, which we have already shown again under short term provisions also, 1,20,000. This is the second effect. Okay, so that is 1,20,000. So the total of this comes to total dividend comes to 1,80,000. Okay, and this adjusted with share premium is another item. This adjusted with these amounts comes to, see, this year there is a profit, but from that this year's profit we are trying to adjust last year's loss. Okay, so we are going to have a negative figure, and that negative figure comes to, I think it comes, if we adjust it, may come to, okay, I think I'll get this total itself. Let's see this. 1,21,500, 1,80,000 minus 121,500 comes to 58,500. I'll put it in brackets, 58,500. 58,500. It's not to be underlined. 58,500. And then the final amount comes to 3,60,000 minus 58,500 comes to 3,01,500. 3,01,500. So this is the final of the reserves and surplus. This I'm going to show here. 3,01,500. And then the total, hopefully it tallies. I think it does. It comes to 22 lakhs. The balance sheet total comes to 22 lakhs. 22 lakhs.